So I'm going to go over DXY to start with, and then we'll move on to Euro. I've only been concentrating on Euro. I do trade Great British Pound as well, so but just not as much really as EU. EU's got a better correlation to the DXY dollar, sort of inversely correlated, as I've said before. So that is what I tend to follow. So I'm going to go up onto the monthly time frame here, and we'll see. Again, I just start from scratch every week. So in the bottom of here, I'll just go there. That is a bearish fair value gap. You'll see here we ran up into that, and now we've firmly rejected that. I'll put monthly there, for monthly. Now, showed just before that when we went down to weekly, we never got above this high here. This was the weekly high. So the fair value gap on a weekly basis really runs from this low here down to this low. But we did travel back up into here. We travel back up into this area here. So you kind of take that. That's what's left open of that fair value gap. I don't know if you just zoom in on that bit. So from that high there to this low, that's how much of it remains, because this bit of price got filled. So when price was coming up into here, I was still looking for this to be reached for the weekly. But that never happened. We've rejected from this area. And this is all to do with interest rates and what the Fed are doing in America, or what the market's anticipating they're going to do, because inflation seems to be tamed. It looks like we're done with the interest rate cycle, and we're probably going to be heading into cuts into the middle of next year. So the markets are always forward looking, and that's what we've sniffed out in here, and rejected from that area. So really, the next draw on liquidity is most likely, there's a fair value gap here, but ultimately that would be like it's a buy side imbalance, sell side inefficiency in there. That's what this gets referred to. So if it's going bullish like this, it's a buy side imbalance and a sell side inefficiency. So it's not seen sell side. The price moved too fast from here to there, and sell side wasn't really offered. So when you consider the interest rates most likely being done, and this is what's caused that, then you don't anticipate this coming back up into here, unless potentially in the Middle East, America get involved with the conflict there. Then that could see the US dollar rally higher. But right now, my focus would be on this inefficiency first, but more than likely this is our draw. This is the draw on liquidity. Liquidity. So that's where price, I feel like, is headed. Last week, so this is a weekly candle. Last week, this was what happened on the dollar. The week before, we had this big down close candle. So because this is now closed, we've actually got this in here. Okay, so that's a sell side imbalance, buy side inefficiency. So it's a SIBI. If I do bear. So these, I'll make these even lighter because we're kind of done with them. Okay, so they're just there. They'll be gone again next week by the time I do another video, but you get the idea that we're just looking to stack all these levels. So what I'm looking at here is we've actually got this here, these consecutive up close candles. They were bearish order blocks, but now I would expect to see us sort of come down through here bounce back up into this area, and then treat that as rejection and come lower. But first, what I'll be looking to see for this week is if we're wanting to come up into this fair value gap right now. This could act as a breakaway gap and remain open, but I'll want to see how the week opens. So there's a ICT concept of open, high, low, close. So when you think about, say, this candle, okay, then, or let's just do last week. So that was the open up here, because this is where this one closed. This opened here. We made a high. We then came back down low. We wicked down here and made the low of the week, and then we traveled back up and we closed in this area. So within this, I'll just go and show that exactly how I mean. So if I come into a 60-minute chart, okay, so let's just look at the week. So what happened for that one weekly candle? This is where the market opened. We came up, we came all the way down here. We made the low of the week on Tuesday. Okay. Low of the week, then we traveled bullish. So this is an open, low, high, close. So we've opened here, we've made the low, we've then made the high, and then we've closed. Okay. So this is the way you've got to think about it all, because everything is fractal, price is fractal. So within this, there's a whole load of price action in this one weekly candle. And again, this is layering the different time frames to then create our bigger picture. So, like I said, I'm wondering if it will come up into this area this week before then coming lower. If it comes up into this area, then I'm looking for sells. I'm looking to sell it. My first area of liquidity would be this low. That'd be the first target. But ultimately, we're aiming much lower over time. So on a monthly time frame, we've respected this level. Now this is a weekly time frame. So for me, if this travels back up into here, this would be internal liquidity. Okay. And then I would be seeking external liquidity in the here. Essentially, that's the opposite. So if you think about the monthly time frame, we've came up here, we've tapped into the monthly fair value gap, which would be classed as internal liquidity because it's inside this range. So from this low to this high, that's your monthly range. And it's came and tapped up into here. The other nice thing about this is if I take the high from there, the very tip, just down to this one, the low, look how we just tapped into a premium. So this is the sort of thing I talk about quite often, that you're looking to sell from premium and to buy from a discount range. So here it's tapped into a premium, so that's pretty positive for me to now be looking for sells. Now, you then stack the ranges as well. So this is the monthly range, okay? And I can then split up, I'll delete that one. And this range here, so this would be like a weekly range. So I can go from that low to that high. And you'll see here, we've actually tapped in to a discount up there. So if I was selling from this area and I was unsure of where the market was headed, as a minimum, I could say, well, I'm looking for 50% of this range. So the target could have been this area in here. Ultimately, I think it's going to come much lower because I see this as being the long-term draw on liquidity. So that would be how I'm looking at that. Now, for next week, what would I like to see on the US dollar? So this is the weekly if I go to daily. So as I see here, this is a bearish order block in here. So any up close candles in a sell program is a bearish order block. So you see here, we moved lower. There was fair value gap in here, but we actually travelled up beyond that. We reacted off this bearish order block and we came lower. Now, we didn't break the low here, so I would be looking to see. So when I talk about the open high low close or the open low high close, so for me, come Monday, Tuesday, now I plan this based on the economic calendar. Now, I have no idea what the actual date is going to come out, okay? But I paint a picture here and then I form scenarios based on sort of the data and when it's coming out. So there's no news on Monday. I'll want to see how Monday opens, okay? Let's see what Monday does. Now, it can only go up, down, consolidate, right? So I'll wait and see. What I do like the idea of is we're very close to this low, okay? So there's the chance that we open up on Sunday tonight, we travel down here, we perhaps take last week's low, okay? We then reverse and we travel up. This is last week's high. So this was the low of the week, this is the high of the week. This is quite a tight range. So what I would really quite like to see is this come down, take last week's low, and then turn back around, come into this weekly fair value gap, okay? So I'm going to change this to weekly. This weekly fair value gap, we're now on the daily, so it doesn't look like a weekly fair value gap, but it is, okay? So take this low and come back up. Take this high, there'll be sell stops in here and there'll be buy stops in there. Okay, people have their stop losses. Those that are long, their stops are below here. Those that are short, they've probably jammed their stop above here. So the market only moves on liquidity and fair value. This is fair value up here. So from a weekly perspective, possibly we come down here, start of the week, we then reverse and come up there. I would really like that idea. However, that might not happen. So what's the other scenarios? So 4 hour, we'll see here. So we've actually broke this low energetically. So we've ran up into this area. That's that bearish order block that I spoke about. It got rejected. And then it's broke here energetically. There's a fair value gap in here. So if the market, that would be a bearish, bearish. So there was a volume imbalance in here. Price traveled up into there, it's rebalanced this. It's then repriced. It's then rolled over, came lower again. So this, there's a lot of liquidity under there, okay? If we look at that, there's a fair bit of liquidity under there. So we are really bearish, right? I think it makes sense. So I spoke about a weekly candle, but a daily candle is the exact same. So there's an open, there's a high, there's a low, and then it's where it closes, okay? So potentially, let's just say Monday, we open, we travel up into this fair value gap, we then reject it, we come lower, we take this liquidity into Tuesday, Tuesday travels down, economic calendar, Tuesday, we've got news at 3 p.m. Potentially, we've come into internal liquidity, we've taken external liquidity in here. Tuesday, you then see the low of the week created. Now this is now thinking about the weekly candle. So Monday's candle is open, high, low, close. Tuesday is open, low, high, close. Then the rest of the week travels up like that. We get back up into this fair value gap. So there's a lot of concepts that all come together with trading. You need to learn the concepts. You need to then piece it all together because it's all just a jigsaw. and it's how you internalize price. So for me, a 4-hour fair value gap is quite significant. There's not a lot else. Okay, there's some liquidity sitting above here, but this is where I think, and ultimately, if we come up into this area, I would probably want to see this here. That's smooth, that's clean, like right along here. That is another draw on liquidity for me. Okay, so there will be stops in here, there will be stops in there. I think it's reasonable for Monday. Open, come into here, come down on Tuesday, reverse, high of the week, close. Then we can start looking to continue the following week lower, potentially. I like the idea of that. That's what I'm going to be looking for this week. I would really like that. This is the draw on liquidity as well, because there's so you don't trade the DXY. So I do this analysis, but I'll be expecting the opposite on. So just on this US dollar, what you've also got to look at, so we've got the daily time frame. So where we're about to open in here, okay, we're going to open in here tonight. You've then got this low here. So there's the potential of a fair value gap. So if I even I'll just take this here and I'll put a line across, and this was Thursday's low. So I'm just going to label that Thursday's low. So in terms of a fair value gap forming here, what you could find is for Monday's price action, if we're going to continue bearish, we could end up running up here at the start of the week. So if we don't do this at the start of the week, then at the start we could end up running up into here, given an immediate rebalance into this low, which would be very bearish for me, and we would be looking at potentially a bigger run lower, rather than getting this retrace. You've also got this liquidity, this old low, swing low under here. So there is, as much as I've said it'd be nice to come down, take the previous week's low, to then take the previous week's high up here, it would also be reasonable for us to travel back up and get an immediate rebalance on Monday up in here somewhere, still in this 4-hour fair value gap as well, and then we'd roll over and push lower, taking out this low, and then you'll see here on a daily time frame we've actually got a fair value gap just in here. So going into the week, I like to have scenarios where I could be nimble and I could change my bias if I am completely wrong. Both would be quite plausible. Even neither might happen. So I'll allow the market to show me its hand first before I jump into any trades. Okay, I'll turn this just fair value gap. So we'll just look at that for euro. So what does that mean for the euro? 1 week. So here's last week's low, previous week's low, and we'll put here previous week's high. Previous week's high. So the thing for me is when we broke up here higher, I'm looking to see, well, where's the draw? What's the inefficiencies? So in terms of inefficiencies, you've got this one from here to there. Okay, so it originally was there. We'll call that a bearish. It was originally there to there, but then we got this institutional order flow entry drill up in here. So really, it's from there to there. That's where the remaining open portion of that fair value gap is. So that's a draw from a weekly time frame. Put that there for weekly. And if I go to a daily, this was really quite interesting. So again, I'm just looking for these bits of inefficiencies. So if you actually look from here to there, there was an inefficiency. that part to there, and I had this marked up on my chart last week. Take that across and look how the price, that's what stops price. That's what caused it to then retrace a bit. Prices came down into this down close candle, which is a bullish order block. There's also this old bearish order block, which is like a reclaimed order block in here that we've then dug into. We broke the high over here and we then dug into there. So there's a couple of things with this level. But again, it would be plausible. So for me, if we're going to go across here and start moving higher, then really the draw for me is this weekly area above this old high in here. Okay, so I would then be looking at how I can position myself for longs up into this area. We have been extremely bullish. This area in here, I mean, this is a big open gap, but it's not to say we need to come back down. It gives us reason for price to come back down into this area. We came up and we kind of, there was still big movement, but it was for the week. It was a bit of consolidation, I suppose. So we're up and we're down, just like we spoke about the open, high, the low, and the close. So we've been bullish in here. So to me, it's plausible that we continue bullish for the Monday up into Tuesday, take this last week's high, and then we come back down and take last week's low potentially. There's an old longs out of this area that I had in there. So that's probably what I'm looking for this week. But again, I'm going to see how Monday opens. We're just going to see what happens. Tuesday, we'll let Tuesday play out, the first bit of news in here, and then I'll probably look for Wednesday, Thursday might be a good idea because the market will have shown us what it wants to do by Monday, Tuesday, Wednesday. This news will all have played out. And then on Thursday, we can catch the part of the move that we're wanting. We've got the PCE price index and unemployment claims. So the unemployment claims, by the way, are the last piece of the puzzle that's needed for the whole recession play. Once this unemployment starts picking up, that's when the real idea of the recession kicking in, and the final piece of the puzzle, I think, to allow us to then start looking to cut rates, and then there'll be stimulus that comes in, which is printing money basically to stimulate the economy, to get the economy moving again, and to get us out of a recession. So that'll be a big one come Thursday. And if we could see what the market wants to do by Monday, Tuesday, Wednesday, it'll have shown its hand, and then we could probably get in on the larger move, position ourselves quite well come Thursday. But we'll see how it plays out. And that's just my thoughts to start with. We've got 4 hours, so just like I said on that. It's a little bit different actually, because if we go back up to the US dollar, we've got this fair value gap here. We've got that draw liquidity, which are equal highs, really, but you've not really, well, I suppose you do. Just this area in here, there would be liquidity. There's liquidity in here. So there's that 4 hour fair value gap. It's a lot closer up here. Be like a bullish. So I'd probably like to come into the hourly to see if there was anything else. There's nothing really here, but I do like this order block. Okay, that looks pretty good. There doesn't appear to be a fair value gap. In there, you've got a fair value gap from here to here on the hourly, which is just above this order block. So that could be a nice area to bounce out of. Bullish order block. Price comes down, we break this low. Potentially people start thinking we're bearish. The market then bounces off this bullish order block, comes down here. This is all Monday. Pushes higher up into Tuesday. Tuesday takes the high here. We then start to roll over for the rest of the week and we retrace back into the previous week's low and down into this bigger fair value gap, just highlighting exactly what I said, that the market only moves on liquidity and fair value. So that would kind of be my idea for this week. I'm sitting on my hands until I see what the market wants to do. I'll just watch price, see if my thesis plays out, and just look to take a piece out the market. You don't need to be in every single move. And this was classic last week, actually. Unfortunately, I had some issues uploading my video last week, but it was in here. Where was the trade? It must have been minutes. I'll just run over it quickly. That was Tuesday and Monday. Was there? So where were we? Oops. What happened? We were Tuesday. That was Wednesday down into here. Yep. So it was this up in here. So we had seen that we broke lower. We broke lower still. When we rallied up here, I'd say there was kind of looking to go short, and then we had this run shorter, this run lower, and then here, sorry. So this was the trade. So we London open, we drop down, displacement. That's telling us we're going short. You had these equal highs just in here that got formed, manufactured equal highs, liquidity draw there. Once that's been ran, we've already shown the intent here to go lower. Manufactured equal highs, run those, the news comes out and drives us down further. I end up getting in that trade and made a video saying what I would like to see, and it kind of pretty much played it to a T. And then the following day, there was this again. So we've got rest and liquidity just sitting above here. The intent, we start chopping all the way back up. London, we get a push higher, and then it started to break down in here. And this was another trade down into here. And this was all liquidity as well. I had this targeted, but we just never came that low. I partialed out and then it eventually reversed and stopped me out for the remainder of the trade. But this is just an example of, you just take little pieces out of the market. You don't try to, right, it's here, it's going to go down here now. You know what I mean? Because a lot of the times price ends up reversing on you and you end up walking away with not as much as you should have. So a nice 3R, take off 80% of your trade and leave 20% going. That's a good rule that I like to stick by. And that way you're taking the majority of your money off the table. So looking here, we also got this order block. So you don't see that on the hourly time frame, but that there on even the 30-minute time frame is another bullish order block. This is going up and down the time frames important because you could easily miss these sort of things. I would still say that this looks nice in here as something to potentially bounce off of. There's no fair value gaps or nothing in here. So if price comes down and we start closing below 50% of this area, then I'd be expecting these lows down into this fair value gap here to then be the target. And And it's nice to have these sort of ideas, these levels, that invalidation levels, I suppose, and you can then say, right, okay, I didn't expect to see that, but that's fine. I now switch my bias and I can look to capitalize in other ways. Okay, I hope this is useful. If there's any questions, as always, just give me a message and I'm happy to answer any questions.